All right, everyone, we're here to talk about how to close in uncertain times. I'm going to share my screen and get started. I think it's safe to say we're in uncertain times. If you feel otherwise, maybe you're in the wrong webinar. Uh, but actually, that can be a good thing, right? Uncertain times can be your friend. There are definitely a lot of problems and challenges in uncertain times, not least to mention that they are uncertain, but there are also pretty big opportunities in uncertain times. So I'm going to try and unpack the opportunities and how to take advantage of them so that you can move forward and make progress as a venture capitalist. So I think many of you have seen this. There's like, oh, things are going up. Oh no, they're coming down. Oh no, they're going up. Uh, so that's called the markets today. That's Bitcoin, that's Dow Industrial Average, the S&P, et cetera, et cetera, et cetera, all around the world. There's a lot of volatility in the world. And volatility is what it is. There was definitely sort of a bump around the US election that's gone away, which you can clearly see here. It's actually gone down from there. And all that just means there's a lot of uncertainty. And for most people, when things are uncertain, they kind of freeze, right? And that is problematic if you're raising capital because you're like, hey, I would love you to give me 100,000, 500,000, $1 million to invest in these amazing new things that are happening in the world today. And the limited partner is like, whoa, 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 I can't do anything because I'm not sure what's going on in the world. And we're hearing this from limited partners, right? We're hearing it from general partners talking to limited partners. And there are ways to navigate this successfully. And that's what I'm going to be covering here today. How do you navigate this uncertainty to achieve your goals? And, the first thing to point out is that so a lot of money went into the markets, but a lot of money has come out of the markets. And, I've been reading various estimates, and it's roughly $4 trillion with a T have come out of the markets in the last few weeks, couple weeks, and they're kind of sitting there. A lot of people don't know what to do, right? Should I put it into bonds? Should I put it back into stocks? Should I move into crypto? Um, if you have money, you're probably went through this calculus yourself. I certainly have. If you have friends that have money, they're going through this calculus. I certainly have. What should I do? Where do I put the money? So there's about, call it $4 trillion with a T that is sitting on the sidelines at this moment, effectively thinking about where to go. Okay. So I just want to emphasize $4 trillion. Okay. So this is important for you to understand because for all the uncertainty, there's like, if you ever were like, where's the pot of gold at the end of the rainbow? I can tell you where it is. It's sitting in the hand of limited partners right now, wondering what to do. So if you're like, oh, uncertainty is like this big problem, I'm going to help you rethink this. Uncertainty is a huge opportunity for you because a lot of times, if you're going into a limited partner and you're pitching them, they have to take money out of the stock market to put it into venture capital, right? They have to take money out of crypto to put it into venture capital. So what you're essentially saying to them is like, look, you've got this other stuff. We're going to do better. So come in here, but they have to liquidate to invest. Well, guess what? Right now, they don't have to liquidate anything because it's sitting there in many cases in cash, right? Or whatever, some sort of money market or basically cash, right? So you have this is like the pot of gold that you as a fundraiser, which you're going to need to do to be a venture capitalist, have to go after. And I'm not saying it's easy. It's quite hard to get because they're guarding the pot of gold, but it's there. It's not much harder to get than when it was in another asset class, right? And locked up. So it's not locked up. It's looking for a home. And you, as a venture capitalist, can be that home. Okay. And so I'm gonna tell you why you can be that home, because there's a number of reasons. I'm going to go through each one. All right. Because you have to believe that you are a good home for this capital first and foremost. And if you believe it, you can get them to believe it too. Okay. And here's a great reason: you're going to skip the uncertainty. Uncertain periods don't last forever. FY, I mean, at least they haven't lasted forever until now. They always come to an end. Order and reason gets back. Things become more predictable. There's a boom market, whatever. So this uncertainty will end. It's not going to last 10 years. It's going to last maybe 2 years, maybe less. I'm not here to predict how long it's going to last. In fact, I'll talk about that a little later. I'm here just to give you things to think about. When you invest in venture capital, you start getting returns in about 3 to 5 years. So even if you had a long period of uncertainty, you will definitely skip the uncertainty by investing in venture capital. So should you put 100% of the $4 trillion into VC? Probably not. But should you put some double digit percentage of the $4 trillion into VC? Probably so, because it will skip the uncertainty. Okay? This is very important. In addition to that, almost everyone on this call who isn't an LP is an emerging manager. And guess what? Emerging managers get the absolute best returns. Like, this is undisputed. They do often 2 to 3 times better in returns than established counterparts in the venture capital industry. So not only are you moving out of the uncertainty, you're moving into an asset class that performs well and into the best performing sub-segment of the venture capital asset class, which is emerging managers. So again, good decision to move the money into VC. And then I have a whole bunch of points, but I want to keep it simple, right? Uh, Early stage VC and VC in general, the late stage VC these days looks more like private equity. So I'm just going to take late stage VC out because it's not really VC. Early stage VC, which is what I consider to be modern venture capital, right? High risk, high reward. Late stage VC, low risk, low reward. Early stage VC is totally counter cyclical. Okay. And there's tons of data on this. This isn't like invented. So this is actually a bit of an old chart, but very accurate, right? And it looks at like points in time with negativity, like the 9/11 terrorist attacks, and markets were it looks like it's going up, but as you can see, there's a stop in growth there. 2008 financial crisis, things actually went down beforehand. And then what happened after these periods of chaos and uncertainty? The returns in venture went up a lot. Okay. So, Uber was born in the 2008 financial crisis. Slack was born in the 2008 financial crisis. Like some of the best, I think Instagram came out of that time period as well. So like some of the largest and best companies on the planet were born in these crisis periods. Okay. Like SpaceX came out of the 9/11 period. So you look at these periods like now that are kind of uncertain and chaotic and blah, blah, blah. And then you say what happens after those periods. Well, there tends to be this amazing resurgence or surge in high value company creation. And by the way, it's a much easier time to invest, okay, right now. This doesn't benefit LPs, but I'm telling you this for you. All right. So maybe I'll stop this to make the point emphatic. You, as an investor, will have the best time investing right now. Okay. Valuations are lower. There are less BS entrepreneurs running around. And as a general rule of thumb, it's easier to get a deal done to boot. So you have the wind in your sails, right? In terms of the market timing to be an investor. The uncertainty scares away certain LPs, but there's $4 trillion pot of gold at the end of the rainbow. So you just got to figure out how to get that $4 trillion loose into your hands, right? Or some small portion thereof. And again, the fact pattern is working in your favor. So I'll go back to the presentation just to reiterate these, okay? Fact pattern number one, they'll skip the uncertainty by investing in VC. Fact pattern number two, emerging managers are the best performing asset class in finance historically. Fact pattern number three, early stage investing is countercyclical. Hopefully, these things will help you convince LPs, but I'll talk more about that in a moment. Tactics you can use. So, why do you need to close now? Why is now so important? Well, let me give you some reasons why now is so important. If you think the uncertainty will continue or increase, then you're better off closing now than later, right? Because you're like, ooh, there's going to be more uncertainty in the future. And I think it's safe to say that that is going to happen. Then people will become less unsure of what to do with their money, and it will be harder to get to the pot of gold because the pot of gold, more uncertainty, they're going to be more risk averse, right? If you believe that in the future there's going to be less liquidity, so if you think that people are going to take this 4 trillion and quickly start deploying it, which I'm telling you they are, then you'll just have a smaller pot of gold to go after, so you might as well go now. Okay? If you think valuations will increase, which they will, then it makes sense to go now. On the positive side of reasons to go now, and these aren't necessarily negative, if you are getting momentum with your thesis or what you're working on, you should accelerate. If you're seeing really exciting deals that you want to invest in, you should accelerate. Where I'm going with this is close now. All right, I find that every year something happens that's kind of like, you should close now. And the people that listen and actually hustle, because it's like a moment where it's like, ooh, this is a really good moment to be hustling and closing. And some people listen and hustle and close, and some people wait. It's just like, I feel right now, because of these reasons and others, that now is a uniquely good time to close, and it's not necessarily going to get easier before the end of the year. And here's the reality, guys. Closing isn't like close and boom, you're done, right? No, you don't wake up and close. Closing takes time. So I'm not going to go too much. I'm going to show you some stuff about this that you need to understand. But if you had all the money ready to go, it could take you 2 to 3 months to close. So you're not really, I have a solution for this that I'll share with you at the end, but it's only available to a small number of people. But like, it's going to take you months to close. And like, formation takes time. Setting up the bank account. This is a super fast process that I have outlined here. It's about 6 weeks. The reality is that managers we work with, the average time is 3 months. The fast people do it in 2 months. The lightning fast people do it in a month. I have never seen a closing take less than a month. Never. So 1 week for approvals, 1 or more weeks to get the bank accounts, a couple weeks to get the LPAs signed. Then you have to do KYC AML, and then you have a couple weeks to get the wires. And this would be a very fast process taking you at 6 weeks. So how does that work out? So if you were to start a closing process next week and it took 2 months, which would be fast, and I'm just sort of going through a rough outline here of, pitching fast to get the commitments, hosting some dinners like a closing dinners, getting the materials ready, setting up, sending out LPAs, getting the LPAs and closing. And this would be a really fast schedule. You're going to get done in sort of mid-May. Okay. Now, okay, mid-May, what does that mean? Well, there's seasonality. The fundraising season actually is global. So if you're in the southern hemisphere and you're like, it doesn't apply to me, there are two sort of dead periods: the middle of the summer and end of the summer, and the middle of the winter, in both the southern and northern hemispheres, which happen to be inverted from each other. So by June, it starts getting pretty hard to close. So if I go back to this, if you hustle and you get more like the faster side of things, you're looking at the middle of May. If you do more of like an average fast timeline and you're like 2 or 3 months, you're kind of pushing into the middle of June. And then you're buttressing right against the summer doldrum, which means that the next shop for you to close will be in September to December window. So these are just things to think about: why you should go now, why you should move quickly, why you have to hustle. We got a unique moment. It's not going to be very fast for you to do stuff. And so how do you do this? How do you get these LPs to say yes so that you can move quickly in this uncertain time? Okay. So I'm going to give you some tips. And look, these should work. They should work even in times of not uncertainty, but you have to do them better in times of uncertainty. And the first one, you have to stay positive. Okay? Like, I've been speaking to a lot of people, and there's a lot of different emotions about what's happening in the world today, right? People are upset about war. People are happy about some things that are happening. People are upset about the volatility. It's all sorts of emotions. You have to be positive, okay? It doesn't matter, right? I'm not saying that the world events don't matter, but if you are not positive, there is no way you will close anyone. All right? You must be positive. And so you have to find what it takes for you to be positive, right? There's a lot of not great things happening in the world right now. Okay. I can tell you something. In the history of humanity, there has been always a lot of not great things happening in the world. All right? Nothing new. With that said, you make the world around you with what you think. So if you are thinking positive, you will bring a positive uh, worldview to the people you're talking with, to the activities that you're doing. And people want and need a positive worldview right now. And if you bring that positive worldview by staying and being positive yourself, it's infectious and it will help you to close. If on the other side, you're constantly upset about things you're seeing in the media, et cetera, you will not be in a position to accomplish your goals and objectives. It's just that simple. And here's the thing. if you are working on something positive, then it really doesn't matter all the other terrible things that are happening in the world, because you are making the world a better place, and you are going to have to just push forward to make the world a better place in the face of things not being that positive, which is why you're working to make the world a better place in the first place. So if you're working to make the world a better place and you're always getting upset by all the stuff that happens, by being upset, you are not helping, right? You must stay positive because you are fixing things. You are making things better. You are part of the solution, not part of the problem. So you must stay positive. And I can't emphasize this enough, but I will come back to it. Um, Once you are positive, right, you can get limited partners excited. And they should be excited, right? Let's see in the chat. Who thinks there are a lot of things to be excited about today? I understand there's a lot of things to be concerned about, but I would argue there's also a lot of things to be excited about as well. So if you feel there's stuff to be excited about, you can say yes, or I got a yes, or something you are excited about individually. I'm excited about AI. I'm excited about the advances in technology. I'm excited about biotech things, right? Um, yeah, so a lot of people, yes, it's a great time. Thank you. There's lots of yeses, lots of exciting things. I mean, it's an exciting time. I mean, it's also annoying. I'm going to tell you something I learned last night. So I was at an event last night, and I'm trying to get a 5090 to run some AI models on my home machines. You cannot get one to save your life. Okay. That's part of how exciting it is. So I learned last night, oh, you can daisy chain two 4090s and you're going to get better inference. So I'm like, oh, there must be more 4090s. 4090s are running like $4,000 a card, which is like 2x over their high retail historical price. Because I guess people have realized, oh, you could do better with 4090s. So now the 4090 prices are more expensive than the 5090s. And that's just part of all the exciting things that are going on in the world, that you can't even get graphics cards because people are so excited about running local AI models on their machines that you can download open source and closed source and all this stuff. It's just exciting, right? So stay positive, capture the excitement, and convey that to the limited partners. All right. And they should be excited too, right? There's a lot of things to worry about, as I said, but there's a lot of things to be excited about, right? Really, a lot of things. I mean, I had such an amazing time. I was at the Game Developer Conference, this little after party, meeting with all these people, and they're building really fantastic, amazing things, amazing things, amazing time. And so, just to keep going, you're also going to need, unfortunately, to turn some of the challenges into opportunities. But again, this is not that hard because it's not like you're literally selling a product. So people have cash or relatively liquid assets that they're looking for things to invest in that will skip the uncertainty and get great returns. Well, guess what you have? You have an asset that's going to skip the uncertainty and get great returns. Like, okay. So the challenge is they're looking for what you have, and you have to convince them that what you're doing will actually do what they want and that you're the right person to do it. But I actually think if you're smart and you put some effort and you work at it, you will understand how to do this. You can master this. This is a masterable challenge for you, right? And then, speaking of mastery, you're going to need to master this fear greed paradigm. And I don't really like fear greed paradigm as a concept, but unfortunately, it's just humanity, right? Like when we get afraid, we do things, and when we get like greedy, we do things. And I think, if we had to choose, I'd rather people operate out of greed than fear. So when I say master the fear greed paradigm, I'm talking about their fear is why all these assets are liquid. And you have to convince them, as I just was saying, that this other way will make them lots of money. And you may even help them break out of the fear mindset that they're stuck in. And that's going to be a bit of the challenge that you face because they're looking at everything going down. And you have to say, look, we are counter-cyclical. When things go down, we go up. Right? That does happen. There are counter-cyclical things. We're it. And so now's a good time, right? So that's the mastery. And so again, everyone, you have to move quickly, right? I think now of course, you don't have to do anything, but if you want to take advantage of the opportunity that I see is present now, moving quickly is a good thing. And we do have something to help. Now, it's only available to people who will go through VC Lab, but we created something called the Start Fund. This is the first time I've talked about it publicly. Only people inside the network know. And we built something where you can start a venture capital fund in under a day. There are no setup costs, and it's the cheapest, fastest, and best way to start a fund. Now, because it's fast and cheap and high quality, there's some things we do that are unconventional, like 100% capital call. So that's something. So it's not all sunshines and rainbows. There's some things that are unique to it, like a single capital call. But a single capital call simplifies things dramatically with a fund. So if you want to move fast, we have a solution. You could have a fund ready to take commitments from limited partners. It's 8:31 in the morning in California. You could have it within an hour. The main thing that makes it take a day is the bank. So if you get in the morning, you can get the bank account by the afternoon. If you get in the afternoon, you get it the next day. But you get a venture fund in a day. And part of the reason we did this is we're like, a lot of times managers need to move quickly. And if it takes them 2 to 3 months just to set the vehicles up and get the bank accounts and get the LPA ready and all the documents in place, and it's in a world where you need to move quickly, that's not the best thing. And so again, I want to go back to something I said earlier, which is please, for you and the world, stay positive, right? This is a great time. And you're going to hear a lot of negativity around you. Just kind of not tune it out, but you're on a path to do something important. There's a lot of exciting things going on. Focus on how you are making the world a better place and just don't let the other stuff drag you down. It is what it is, right? Make your corner of the world something amazing. And hopefully that will radiate out and lots of people will love what you're doing and you'll actually be a positive force in the world. But I can tell you that if you are thinking negatively, it's going to be much harder for you to fundraise. It's going to be much harder for you to have a positive effect on the world. And it's just not going to help you achieve your goals. And on top of staying positive, we believe that venture capital can be a force for good in the world. Okay. I think it's mission critical for humanity to get a double-digit percentage of GDP. So this is in the trillions of dollars moving into venture capital and funding the solutions to the problems that we're facing in the world today. I had a few conversations about this last night. And some people are like, well, not all problems can be solved with technology. And that is 100% true. So, but venture capital doesn't just fund technology, by the way, it funds all sorts of things. So we can solve the problems of the world by investing heavily in solutions, which we're not doing. Okay. So if we could take trillions of dollars, and keep in mind, there are $4 trillion sitting on the sidelines right now. So if we could take trillions of dollars and apply it to climate change and apply it to healthcare and apply it to education and apply it to the many other things that we face as somewhat existential and existential threats, we can solve them. Okay. These are solvable problems. And I would argue there are even solutions to most of those problems today. And for the ones that don't have solutions, we're in such a period of technology innovation that solutions can be made using AI, etc., very quickly. Okay. And we need to fund those solutions and make sure they come to market. That's where we come in. We're going to take the money from the limited partners, put it into the hands of the innovators solving the grand challenges of humanity, and fix the problems of the world. Okay? That's the plan. And there's $4 trillion of money looking for somewhere to go. Well, let's get it in the hands of people solving these problems as quickly as we can. So with that said, everybody, thank you. This was really amazing. I want to get to your questions. I'm excited about where we're going. So let me pause the presentation and turn it over to the questions. So thanks, everyone. All right. Wow, we have 18 questions already. So I'm just gonna sort them by upvote. So you're gonna see a little thumb by each question. If you like a question, hit the thumbs up, and then I'll go for the top thumbed up questions first. All right. There's a technical question. Of course. How can we refine the pack template that you send us? So one of the ways to get commit, so if you do something like a start fund, you can actually just start sending LPAs right away. If you don't, if you're going for a more complicated three entity structure and you need to send LPAs out at a later date, you want to get a commitment currently, and that's called a pact. And so there's a question from Michael. How do you customize the pack template? So we have something called Decil Hub, everyone. It's a pretty awesome tech platform. Let me see if I can share my screen again, and I'll show you how. It's very easy. So this is Decil Hub. It's a tool to run your venture capital firm and fund. You can do fundraising, deals, the back office. You can have a newsletter, events, everything. So it does. You can run your whole firm on it. If you want to send out and customize commitment letters before you get LPAs, Decil Hub also does LPAs. You're going to see packs right here. So you just click that. It will open it up and it says sign packs, pack settings, pack content, pack agreement. So you can edit the packed agreement here. You can edit the page that the pack comes, and the page that it comes on looks like this. So if you wanted to say, it says welcome, hello. If you just want to say welcome, boom, delete, save. And then you can customize the page. You can customize the agreement. You can customize the entire experience. And let's send some positive vibes in the universe right now. We're going to commit $1 million to this fake venture fund that I have. Unfortunately, here, and then boom, I'm going to sign it. There we go. We just committed $1 million. Now it's all, but it's a emphatically making the point that we should be going out and fundraising now because it's a great time. And there we go. $1 million was committed during the call. Okay, so Michael, hopefully we got your question. Okay, sorry to go long on that, but I like Decil Hub. So Deb's asking, how will LPs discern and decide between different emerging managers' approach especially their ability to invest in the current uh, situation and with current valuations. So, Deb, great question. At the end of the day, each LP has very different methodology to make a decision. We've been actually interviewing a lot of different LPs and different programs we have at Decil Group. Here's what I would say. You really have to just talk with the LP to understand what they care about. A lot of them, I would say if there's a generalization, and it's always hard to generalize because there's all kinds of LPs. There's big LPs, middle LPs, small LPs, serious LPs, less serious LPs, etc. Right? But as a rule of thumb, they like to understand how you think about investing. So it's very important for you to think about how you're going to get deal flow. How are you going to deploy the capital? What type of ownership positions do you want? How are you going to see those ownership positions change over time? And if you can talk about that intelligently, for most LPs, that's what they want to hear. Okay. Hopefully I answered that for you, Deb. Do GPs fees carries take a hit in these times? Deb was also asking. No, the 2 and 20 model is universal. If you're an established VC with a great track record, you actually will do sometimes up to 2.5, and I've heard up to 35. I've seen up to 35. But you have to be really like amazing to get there. But so think it generally will go up, but it's sort of the floor is 2 and 20. Again, remember to get questions in and upvote questions that you like. Daniel's asking, how do you explain the outperformance of emerging managers? That's a causation versus correlation question, Daniel. I can tell you my ideas. There's no like because this is this. Like you have this causation versus correlation. So the data is this, and but you don't know exactly why the data is that way. And so, but I can speculate. So emerging managers are definitely hungrier. They come in with a pent up network, so they haven't used their network for VC before. So once they activate their network, a lot of gold. It's like the first time you go to a river and you're panning for gold, there's going to be more gold than the 100th time you go to the same river, right? So there's a pent up demand in their network. They're hungrier. In addition to that, they have smaller fund sizes. Smaller fund sizes often equal better returns. That's highly correlated as well. And last but not least, they tend to be more specialized. So as you get bigger funds, you invest larger amounts of money, but you broaden your scope because you have to deploy more capital. And it turns out smaller funds with a specialized focus perform better, and that usually is the case with emerging managers. Manush is asking, how can LPs remain confident in emerging managers who have no prior track record, and what strategies can these managers use to mitigate the risk? Yeah, so yeah, it sucks. It sucks to be a new manager, that's for sure. I mean, that's why we created this start fund, Manoush. So we find that it's very hard for new managers to get really big fund sizes because they can't prove to LPs that they can, do it. So if you've been an angel before, if you've done things with startups before that have led to great returns or outcomes, that definitely, so you can point to your previous track record as a human being and say, I've done these amazing things, or I've helped companies in the past, or I've angel invested and got great returns. So you point to your personal track record. That's really the only way to do it. But LPs are like, well, it's still pretty risky. So we did the start fund. The start fund can be as small as $500,000 or even 250,000. So you can have a very small fund one with the start fund so that you don't have to prove yourself to raise tens of millions of dollars, if that makes sense. Okay. How does fundraising for a venture studio differ from a general fund? Um, it doesn't. Look, venture studios are very popular right now. They're performing very well. So, in some cases, raising for a venture studio could be easier than raising for a fund, though there is a bit of saturation in venture studios right now. So it's starting to become oversaturated a bit. But in general, venture studios and funds have the same challenges, same opportunities. I would say venture studios are a bit hot right now, so they're maybe a little easier than a traditional fund, but roughly I mean, it's super hard. When I say a little easier, it's like you're wearing Gore-Tex climbing Mount Everest and the other guy is wearing something not as nice as Gore-Tex, right? It's not like, whoa, we're not climbing Mount Everest anymore. You're still climbing Mount Everest. You just have better gear. I don't want to make fundraising sound easy. It is not easy. It is just a smidge easier if you're doing potentially a venture studio. Okay, Catherine's asking, is the Start Fund a U.S. structure only? Yes, and it's only available for VC Lab participants. The reason I brought it up on this is not so much to tell you about it. If you're not in VC Lab, we have about half the participants in this session are in VC Lab, and not everyone knows about it. So that's why I brought it. It's not public. You can't get it if you're not in VC Lab, just to be 100% clear. This is not a sales pitch. It is not for you. Like if you're in VC Lab, you can do it, but that's it. Michael is asking, how do I convince my investors that the tariffs won't affect the value of my portfolio? Yeah, okay. So, yeah, great question. Look, I don't want to go down the tariffs. I think the tariffs are being used by the administration as a negotiating tactic in the U.S. So, I'm not speaking on behalf of the admin. I'm not getting political. I just where I'm going with this is, so far the tariffs are seem more like a negotiating tactic than an actual strategy because they haven't been rolled out or they're just being talked about and things are being negotiated. So here's what I would say. Um, you you're like tariffs affect things if you're buying stuff from another country. They haven't been rolled out yet. And at the end of the day, the consumer pays. So, from an investment perspective, you have to say, look, the tariffs are part of what's making, or the threats of tariffs are part of what's making this time feel very uncertain, right? Uncertainty leads to better outcomes in venture capital. So while the tariffs themselves may have good or negative effects, and that's what's creating the uncertainty, actually, what we need to look at is the uncertainty itself is a positive, right? And that's how I would frame it, right? Because at the end of the day, the companies will figure this out. There's a series of email communications mentioned in Decil Hub, introduction, follow-up, call for meeting, follow-up, etc. Do we follow exactly like that, or can we fast track if the prospect is a friend, etc.? I mean, listen, the templates are there because there's a way to fundraise, and I don't want to go too much into this minutia, but it's like you want to meet someone, then you want to pitch them because that's how it's legally supposed to be done. So there's templates to meet people that don't talk about your fund, and then there's templates to pitch people after meetings. So you have meetings first, pitching second. So the stuff in Hub is designed for the ideal closing. And of course, nothing is an ideal, right? So you have to adjust to the circumstances of the LP. So if you've known an LP for a long time, you don't need to meet with them. You could talk with them about your fund right away if that's what you want. Maybe you do want to meet with them first. That's why I'm saying very super case by case. But I would say for people you don't know very well, the templates are great to follow literally. for people that you have relationships with, you have to customize accordingly. Okay. Um, Nizar is asking, what's a target percentage for a first close? I had a really interesting conversation with Big LP yesterday, and they said if you closed 50% on your first close, I would think very highly of you. And yeah, sure. We say 10%. So or a million. Now with Start Fund, you can close with much less. You're going to have a much lesser fund size. So let's sort of segment the two. For a normal venture capital firm and fund, your minimum first close should be a million or 10%. And if you can get higher than that, great. But time is the enemy of all deals. So if it's going to take you 6 or 9 months to get to 50%, or you could close on 10% right now, I would say close on 10% right now or $1 million, whichever is higher. With the Start Fund, you can actually close on much less. You can close on as little as 250,000 because the fund sizes are smaller, et cetera. Okay. Luis is asking if we go for a Start Fund, can we still use the Decil Hub LPA model? Yes, everything in Start Fund. Decil Hub has built-in LPA signing for normal funds and for Start Funds. It does the whole investor onboarding. In fact, I'm pretty proud of this. Because of Start Fund, we finished a project we've been working on for a long time. We call it Click to Close, and it's basically like an LP can go through a couple screens and sign the LPA, finish the wire, and actually complete the entire close kind of seamlessly in a web page, which is not the case in the real world today. In almost every platform and system on the market today, closing is not click to close. It's like you might be able to sign the LPA, but then it will email you a wire and like, or worse, much more manual processes than that. Closing today is very manual and slow. So we've created in Decil Hub what we call click to close, which is relatively fast, and LPA can get all the way, LP can get all the way through to a wire in maybe, under 10 minutes, right? Which is pretty fast. Let's see some other questions. Aditya is asking, how did Eric Zhu raise 20 million VC fund at the age of 15? In fact, he's the world's youngest. Again, guys, don't believe anything you read. I mean, the world is littered with BS. So what I would say is probably 10% of that story is true, right? So, at this point, anything you read, anything you see in the media, you have to basically assume is not true. And how do I know this? Because I'm on I know the truth. So I'll give you an example. There are tons of stories that come out all the time about how VC is suffering and VC is dying and emerging managers are failing and no one's raising a second fund. And like we've launched 60% of all new venture capital firms worldwide. Okay. So I would say that I have my finger on the pulse and I'm seeing the real data and I'm reading these articles and I'm looking at real data and I'm like, these things, there's zero correlation. I'm like, this is fantasy. Like, like I don't see any problems. People are raising fine. No one's struggling to go on to fund two. Like who wrote this? What's their source? No one bothered to call me because I would know. I don't really like talking to media because they don't tell the truth anymore. But yeah, I mean, just don't believe any of that crap. If you see something and you're experiencing it, it's probably true for you. It doesn't even mean it's true for other people because that's another thing that happens. Like a manager's like, it's so hard for me. and they go and they tell a reporter, "Oh man, it is really hard to raise. I don't know anyone who can raise," meaning themselves. And then the reporter's like, "Nobody can raise," and it's like source of two. And those are people who have time to talk to a reporter because they're failing. So anyway, just ignore the media. Manoush is asking, before reaching out to LPs, shouldn't we first establish the Decil Hub website to find the team members? Look, you cannot have a website. You may want to have a CRM system so you could set up tools, but you can't talk publicly about what you're doing. In fact, you can't even tell an LP what you're doing until you meet them. So you must meet someone, you must get to know them. It can be in a Zoom call or whatever. Once you know them, you can pitch them, right? So we'll cover this in things like the program. So let me get some more questions here. We got, see, as I said, remember, last few minutes, lots of questions will come in. Hey, guess what? We're there. Marie, I'm excited about the tariffs on Canada. Do you think there are opportunities for growth of energy consumption in Canada versus Canada sending to the US? Again, I don't think tariffs are going to be around for the long haul. I think they're a negotiating strategy. I wouldn't plan I wouldn't plan one way or another around tariffs right now. It would be like in a year's time, if they're still around, you could have ideas in this point where you're like, hey, if they're still around in a year, I'm going to do this, this, and this. But I would be willing to bet that between now and a year, they're going to change 10 ways to Sunday. And by the way, that's part of the reason why this time is uncertain and a good time to be investing because all these things are changing, ergo uncertainty. Tim's asking, if the money doesn't leave their account until you do the capital call, how are they skipping the uncertainty? Um, so, well, you can do 100% capital call with the start fund, but most of the time you will not. If you don't do a start fund, you're going to do it on a capital call structure. And it's a great question because it depends on how your fundraising goes and all these things. So, in theory, you try to deploy over 2 years, and most of that in the first year. So you will call most of the capital in the first year, assuming you get to a full close, not closing over time. So for those that close quickly, you'll be calling capital over the next year. And so whatever piece is called will skip the uncertainty because right now I feel like the uncertainty is probably going to last for, I mean, I don't, 2 years, if I were to take a guess. I don't like talking about that because I think it's somewhat negative, and I like to stay positive. Remember, stay positive. So I do think it's an opportunity, but I do think we'll be in an uncertain time for roughly 2 years. Could be more. It could be less. Hopefully less. Um, Robodust. Hopefully I said your name right. How is the scope to get fund for deep tech for retail? Look, I the for VCs with a thesis, you're going to convince LPs that you're the person to build the business and to fund the things, or build the firm and fund the things that are going to change the world for the better. And I like to say, actually, Mike Supervici first said this, that there's the manager, the limited partner, and the thesis. And there's this moment where that all just comes together. It's magical. The limited partner likes you, they like the thesis, and it's like, let's do this, right? Um, you can make that magic happen for any industry. There are people that love hardware. There are people that love biotech. There are people that love crypto, and you just have to find them. And if you're the person to do your thesis and you have the thesis and the right LP, you can raise money for anything. Kate's asking, are there any approaches for effectively getting from commitment to wire? Hearing a lot of LPs dropping out in the interim. That is true. Well, I would say there's drop off at every step in the LP journey. There's drop off from a commitment letter to an LPA, from an LPA to a wire. Uh, that happens. The drop off from LPA to wire, though, is really small. I mean, it's something like 1 in 100, even now. So it's very likely that many people on this webinar, and there's 100 and something, 180 people on it right now, that no one here will experience this, or one or two, because it's 1 in 100. So it's possible at zero if you just get lucky with 180, maybe one, maybe two, one or two LPs, meaning one or two GPs might experience this. So it's super rare. I wouldn't worry too much about it. Um, we're running out of time, so let me leave you with the thought, everyone. Hopefully, I was encouraging to you. I believe now is a good time. I believe that we have an opportunity to potentially tap into the $4 trillion kind of sitting on the sidelines and put it to work, making the world a better place. And really, there's no better use for that money right now. You get good returns, you make the world better. So we need to go out there and convince LPs that this is the right way forward. And it is the right way forward, right? Imagine you can take money, get great returns, and make the world better. Like, and skip all the chaos and uncertainty. I mean, that's a pretty compelling offer. And the money's not doing anything right now. It's sitting in savings accounts or, yielding treasuries or whatever, but it's not really working. They can put the money to work and make the world a better place and get great returns. So let's make it happen, right? Let's make it happen. Anyway, thank you guys. This was great. Hopefully you enjoyed it. I loved it. Have a great day, and hopefully we'll find a way to collaborate on many exciting things. Thank you, everyone.